Good morning. Today is Monday, October 30th, and the time right now is 11 in the morning. And let's do a little bit of recap and to see what may actually happen in the coming week itself. So we can see the equity market closes on a weak note on Friday, despite a blockbuster GDP numbers for Q3 at 4.9%. So basically, this is happening as the Middle East war has escalated over the weekend, and this is definitely not creating the right environment for a rally in equity markets. But again, the market has been pretty well sold off the whole of last week. In fact, it has been selling off since the start of September. So we're going to end October likely to be in a weak note, and possibly when we go into November, there could be a chance for a technical rebound before it goes back down in December. So we can see that currently the Dow Jones cash market is trading, or rather registered a low of 32,327.2, and this is laying the groundwork for a possible rebound. If there's going to be one, I think it's going to be kept at about the 33,000 levels or 33,273. So do watch out for a rebound into this very minor area here before the market unravels one more time. In the S&P 500, we also see something quite similar. We can see that the S&P 500 cash market traded to a low of 4,103.78, not very far away from an area of previous demand at 4,564 to 4,590.16. So if we're going to get any kind of rebound, it's likely to happen towards a 4,219 to 4,259.38, at the most. So we can see that if we're going to get a rebound, this is about all we can expect for now. And over in the NASDAQ 100, I do not have the cash market index with me right now. I can show you the futures contract. Now, this is the NASDAQ 100 futures traded in CMEs. You can see that the price traded to a low of 14,136.5, and this created on the daily time frame a larger degree three-way pullback which hit the equality level. So if we do see a bounce, it's likely to be kept at about 14,713 to 14,790 level. So if we going to expect some kind of bounce, this is about all I think it can do before it started to unravel one more time. And over in Asia, we can see the Nikkei 225 is attempting to rally, but I think given the poor sentiment on Wall Street last Friday and the risk of a widening of the conflict in the Middle East, definitely investors are definitely being very cautious, trying not to take the market much higher. We can see that if the market do ever rebound, I think the previous area of supply is going to be about 31,470 to 31,730 levels in the futures contract. And also in Hong Kong, we can see that the Hing Index also attempt to rally this morning, but I think the sentiment is pretty poor. At most, we're going to get a bounce back to 17,562 to 17,611 in the futures contract. This is a possible three-wave rebound, and it is likely to be within this area of prices before it meets some serious resistance. And over in the dollar, we can see dollar has been very, very firm. For the whole of last week, you can see that the market actually rebound from 105.36 last Tuesday all the way to a high of 106.89. So we did see a bit of a pullback, and if we can continue to see pullback, I think we're going to see some kind of support about 106.14 to 106.27 before the market rally higher to somewhere to test the 107.04 to 107.24. Now the last week high is at 107. This round the high is at 107.35. So this is going to be the two areas to watch out if you are into dollar index. Now in the euro versus the dollar, we can see euro dollar actually traded to a low of 105.21 before it found support. This is marginally below the area of demand which I previously identified at 105.23 to 105.48. So the market did bounce back a little bit, but upside is going to be quite limited because I think the immediate concern will be this level, which I think will be a barrier to higher prices, and this level is 106.06. Okay, even if the market did manage to recover beyond this level, I think the much bigger difficult area to overcome will be 106.70 to 106.95. Over in sterling, we also see the same thing. We have a bounce off 120.69 last week, and we can see that the market did manage to recover to a high of 121.63 before it pulled back. So right now the market is going to be locked between these two area of prices, between 120.69 to 120.96 or the 121 54 to 121.76. So trading range should be quite limited. Now, don't forget, this week we have a lot of central banks going to decide on interest rate. We have Bank of Japan coming up next, which is tomorrow, followed by the Bank of England on, I think it's on Wednesday or Thursday. Definitely, the Federal Reserve will be releasing their decision on Wednesday night, our Thursday early morning at 3 o'clock in the morning. Okay. Now, don't forget that we have gone back to normal trading hours, meaning to say that the daylight saving is over starting today, the first week of the going back to normal. The markets in the States will open at 9 p.m. Okay, do note that. Okay, so don't be surprised if market doesn't move at 8 o'clock as usual. So over in the Aussie, we can see Aussie actually kick off a bounce from the low of 0.6270, which is quite nicely. But I think going ahead, I think it's going to be facing resistance at about 0.6378 to 0.64 even. So this will be the immediate level to test if this attempt to rally has any leg in it. Okay, so most likely I think it will be trading range bound for a while. Okay. And over in dollar Canadian, now this is the one that actually has been very robust. We have a high at 138.80 on Friday. So if we do get a pullback, it's going to be very, very shallow. I think the support is probably around 137.96 to 138.36. And I think this level should hold before the market propel higher beyond 138.80. Immediate target is about 140. So go ahead and do this trade if you think that it's going to be able to sustain. I think the long dollar scenario is still very much in play right now, considering the Middle East tension. Now, the other one is, of course, benefiting from, or I shouldn't be saying benefiting. There's actually seen a rush of investment is actually gold or precious metals. You can see precious metal has gone back above $2,000. Now, compared to where it was just a fortnight ago, just before the start of the Hamas attack on Israel, which happened on October the 7th. This is the day before it. $1,810 was the low, and the market has already gone up more than $200 within a span of just less than 2 weeks to a high of $2,009.56 on Friday. And the market is very, very firm. If we do get a bit of a pullback, I think the best we can expect is somewhere around $1,976.90 to $1,985.74. So I think the market has a lot more potential to the upside, although immediately there is some kind of resistance in these two areas here between $2,002.77 to $2,017.81, with another barrier which at $2,038.90 to $2,053.05. So once these two barriers are eliminated, there is nothing going to hold back this gold market. Okay, so I'm taking a very, very bullish outlook on gold for the time being. Okay, so in silver, we do not see the rush up like what we saw in gold. However, it is still a precious metal complex, and you can see that the lowest traded so far is at $22.43. It is, of course, referring to the spot silver market, and I think it's a matter of time market take up $23.69 and are on the way to catch up with gold. Okay, and over in crude oil. Now, crude oil is definitely a buy because the entire Middle East contributes a big portion of the world supply of crude oil, and the Strait of Hormuz in particular, where Iran controls about 20% of the flow of crude oil into the rest of the world. So if this conflict widens to include Iran, all bets are off, and if Iran decides to close down the Strait of Hormuz, it will have a major impact on crude oil prices. So do look to buy crude oil rather than to look to sell, because anything that's lower is good to buy. And keeping a posture of lower to buy kind of posture, considering the tension that is very, very real going on in the Middle East. So immediately the market is capped around $85 to $86.20. So if the market do pull back, like I said, if it ever pull back, it is definitely a buy. And if this end up as a three-wave decline, technically speaking, then there's potential for a market to move to $76.30, perhaps even lower, based on the technical consideration, because this is the equality level at $76.31. However, the market may not decline as deep, but any decline should be seen as a buying opportunity. Okay. And over in Bitcoin, we can see the tension in the Middle East has spilled over into the crypto space because of all that's ongoing. Equity market is in the doldrum, bond market is collapsing, and where else can you park your money? Okay, so one of the good place to consider is alternative investments, which is something the digital asset space is actually good at. So if we look at how the market has been rallying to $35,132.75 last Wednesday. Now, when you consider where Bitcoin was at the beginning of the year, something around 15,000, this has already doubled. Okay, so in terms of return on investment for the year, Bitcoin is leading the way. It has shown 100% increase in value. So this is definitely something we want to consider again actively if we do get a chance to buy. But the nearest buying opportunity, unfortunately, lies somewhere at the 30,000 levels. At the moment, where we are right now, 34,300, it looks remotely impossible for the price to go down to 30,000. So the best we can expect is a technical pullback of 3-wave, targeting 33,000 to $32,625. So this is about all we can expect for now. There is nothing technically that can hold this market. For all we know, this pullback may develop into something else, but there is nothing to hold the market until all the way to 30,000. So there you have it. In the meantime, there is nothing also to cap this market all the way under 38,000. So you can see there's going to be a lot of potential going forward. So this is my 2 cents worth for the day. In the meantime, you take care, and I wish you guys have a great week ahead. It's going to be pretty volatile this week because we have so many things that's going to be released this week. Okay, and like I say, I'll see you tomorrow. Bye-bye.